to the Tech Money Podcast, where the worlds of technology and personal finance collide. Hosted by certified financial planner, speaker, blogger, and self-proclaimed personal finance nerd, Malcolm Ethridge. Each episode aims to make you just a little bit smarter about your money, all from the perspective of the tech professional. Without further delay, here's your host.
Hey there, listeners. Malcolm here. And on today's show, we're talking taxes. More specifically, we're talking about the differences between tax planning and tax preparation. While they may sound like the same thing to those outside of the financial services profession, there's several key differences between the terms tax planning and tax preparation. In short, one takes place once per year and is more transactional in nature, while the other likely happens multiple times each year in stages and is meant to be seen as an ongoing advisory relationship, sometimes lasting decades. Tax planning could be as simple as making sure you've appropriately set your withholdings to avoid any withholding issues at the end of the year, or it could mean more complex strategies such as establishing legal entities and holding companies that qualify you for other deductions and opportunities in the tax code specific to your industry or profession. So that's what we'll be talking about today. My guest, Christina Lael, is a certified public accountant, a tax attorney, and a bit of a tax nerd. Her firm, Lael Tax, provides both tax planning and tax prep and specializes in working with small business owners on anything from company formation to ownership transfers to dissolutions. Christina is also the author of the book, Thinking Outside the Tax Box, so you can imagine where this conversation is bound to go today. So with that brief introduction, welcome Christina Lael to the Tech Money Podcast.
Thank you, Malcolm. I'm so excited to be here.
Yeah, I appreciate you agreeing to come on and do this. This should be fun. I usually will joke when I have an accountant on the show and say, you know, we're going to do our best to keep from boring people to death with the topic such as tax, but folks will get it as soon as we get really into the conversation. You really are excited when it comes to talking about taxes, so it makes it easy to have the conversation.
Yes, and not only talking about taxes, but saving people money in taxes. That's super, super exciting, what people can really get behind.
Yeah, that's a good point, because usually accountants, CPAs, tax attorneys, even maybe not so much tax attorneys, but we'll get to that in a second. But usually the conversation is like, it's from a more pragmatic standpoint. It's like, you know, you made the money, you pay the tax. That's kind of just, you know, what it is. And you thank God that you have that kind of a first world problem. But then you do have tax attorneys who I find are usually more outside the box artists, if you will, when it comes to figuring out ways to color within the lines and minimize that tax bill as much as legally possible, which is a totally different arena, if you will, versus we're just sending in the 1040 and the attached documents and see you again next year.
Yes, that's exactly right, Malcolm. Most CPA firms and accountants, they do no tax planning, and they offer all different kinds of services, which is fine. But if you really want to save money in taxes, you really need to work with a tax attorney that knows the tax court cases and the tax law to be able to apply it to your specific situation.
Well, I called you a tax nerd in my intro, but that may have undersold it a bit, because I read somewhere where you said that you like to binge read tax law like normal people like to binge watch Netflix, which made me chuckle like it just made you chuckle. But how is that even possible? Like, how is that the thing that you like spending your free time doing?
Well, it really started when I was in law school, and I was a CPA first, a certified public accountant first, and then I went to law school, and my colleagues and classmates wanted me to start preparing their tax returns. And I started taking classes in law school. They're very small classes about taxes. They were the smallest classes there.
Of course.
But I took some classes with the top tax attorneys in Nashville, Tennessee, which is where I am from, and got to see how much of the tax code, which actually 99% of the tax code, is about what is not taxable and what can be paid at a reduced tax rate and what are the exceptions. And especially if you are a business owner, there are so many ways to reduce your taxes simply, legally, and efficiently. So that's what I got excited about, because I was able to apply it in my own life and start using these strategies, which kept more money in my pocket instead of sending it needlessly to the IRS or possibly even your state if you live in a state that has income taxes. And so that was super exciting. I mean, we were able to pay off our house quickly because of that extra money. It made such a difference. I've had people that they were able to build their dream home with the extra money. They were able to help their kids with college. They were able to invest more in their business. They were just able to save for retirement because I can show them how they can save money in taxes without actually spending more money. So some accountants, if they do any tax planning at all, they may say, well, you just need to buy more equipment or buy a truck.
Find another 179 deduction.
Right, yeah, or contribute more to a retirement plan. Well, you're spending money to save a portion of that in taxes. That's not, and that's all fine and good if that's what you want to do or if you need that equipment. But I help people save money in taxes without spending additional money because that's all I focus on is tax planning and tax returns, me and my team specifically. So we don't offer all these different kinds of services like so many other accounting firms do, like payroll or bookkeeping or wealth management. So we really just focus on tax planning and preparing the tax returns so people can save tens of thousands, sometimes hundreds of thousands of dollars in taxes legitimately. And it really changes their lives. And that's what I'm so excited about.
And as if you didn't have enough to do, if I understand correctly, like you work with folks through Lael Tax, call that the done for you offering is what I'll say. But then because you are the self-proclaimed tax nerd, you went on to create what I'll refer to as the do it yourself version. That's the freedom tax offering.
Yes.
You guys have too. Am I characterizing that right?
Yes, that's perfect, Malcolm. So what happened is with Lael Tax LLC, which is my first company, that's where people can work with me individually, one-on-one, and we do everything for them. But we grew so much and I could only help so many people, and I was having to turn people away, specifically business owners. So I created this one-of-a-kind program. There's nothing else like it on the market that guarantees, I offer 110% guarantee actually on it because it's so phenomenal, that any business owner can save money in taxes at a ridiculously low price. You sign up for the program and it walks you through with some videos, you answer a few questions, and it tells you exactly the strategies that you need to implement, and it basically implements it for you and produces all the documents and any kind of forms and basic instructions that you need to implement all the strategies based upon your specific situation. So it's kind of like LegalZoom, but for tax planning for business owners. So we offer email support, we offer Q&A, and it's just an amazing program that any business owner could benefit from and save money in taxes. Again, 110% guaranteed. So if you don't save in taxes the very first year, at least the cost of the program, we give you 110% of your money back.
Can you give me an idea, an example of like what type of strategy we're talking here? So I'm a small business owner who maybe I own a few franchises, right? I have a few Chick-fil-A franchises I'll use as my example because clearly I'm craving some nuggets, I guess. But I own a couple of Chick-fil-A franchises. And so I come to figure out how to reduce my tax bill because, business is booming right now. What type of strategy are we talking about here?
Sure. And I've got some free webinars that your listeners at freedomtaxplans.com, they click on podcast listeners, and there's some free webinars that they can listen to. One's about 25 minutes. One's about 10 minutes if they're short on time. That really goes into these different strategies and shows them how a lot of business owners that we work with are saving money in taxes easily and legitimately. So, but I'll go over very quickly. But if you want more information, it's absolutely free for your listeners. And so one thing you could do is there's a very specific way you can rent out your home to your business to pull money out of your business tax-free. So you're not spending more money because you either are renting or you have a home. Hopefully everyone has some place where they're living. Yeah. So even if you're renting, you can use this. So when done correctly, it's a way to pull money out of your business tax-free, which is my favorite tax rate of 0%. so that the business gets a deduction and you can receive that income and not pay taxes on it.
Got it.
So that's just one of the ways.
Yeah, no, but that does help paint a picture a little bit to understand a little bit better. And it also helps explain, you mentioned working with business owners, as sort of where your focus became. But from what I understand, you were initially working with attorneys as sort of your main client base. And I assume because they were similar to you and you could speak their language from, your own experience as an attorney. But then you made this pivot to working with entrepreneurs more broadly. What was it that spurred that change for you?
So great question. So I did start working with attorneys because I am one. And that's in law school. I started preparing my classmates tax returns and showed them how to save money in taxes. And then by referrals, I started working with a lot of attorneys, but I grew so much and can only help so many at a time.
Yep.
And I still work with one-on-one with attorneys and business owners and other people. And even the Freedom Tax Plan program that I created, even attorneys could use that. But I created Freedom Tax Plan because any business owner could use it. And that's what I wanted to offer to people and especially to business owners, because I know what it's like being a business owner. I am one. Yeah. I know what it's like. You work so hard to build up your business, and then you get to the end of the year, and I've heard this so many times before, people come to work with me and they're like, oh my gosh, I've got this money in the bank account, and then they get their tax bill. And it can wipe them out.
Yeah.
And needlessly, you can just so reduce that, because a lot of people will say, well, yeah, I made so much money, but where did it go? So
funny enough, we get that on a regular. So in my day job as a financial planner, we get that on a regular basis from clients who work in tech, because the majority of not the majority, but a significant chunk of their income typically comes from equity compensation. And so they look and go, hey, my company's stock has appreciated X amount. And so on paper, I should be doing really well. Like things are good. I'm looking at the net worth statement you guys created for me and that kind of stuff. And I feel good looking at that. Then the tax bill comes and I see how much I owe. And I feel like I don't actually have that kind of money. And so where's the disconnect? And so that conversation is a very recurring theme for clients that we work with. So yes. I know exactly what you're referring to.
Yes. So Freedom Tax Plans, either Freedom Tax Plans if you're a business owner and want to do everything yourself, or if you're in a specific situation, or what I say is make more than $500,000 net, then that's when you want to reach out to me individually so that we can do more advanced tax saving strategies for you and do everything for you. But like I said, I'm just so excited about it because it's the only thing out there on the market where any business owner can use it to reduce their taxes legally at a ridiculously low price right now.
I'm glad you put a dollar figure to it and made it tangible, because then I can kind of have some idea of who fits into this box, right? When we talk about needing to work with a tax attorney, it sounds a little bit intimidating probably to most people who don't necessarily think of themselves as that well off, even though, again, the audience of this podcast typically are people that are in that bucket and just don't think of themselves that way necessarily. But back in season 1, I'm pretty sure it was episode 4, I interviewed a friend of mine, Erica James, and we talked about how to know whether to self-prepare your taxes or hire someone to prepare your taxes for you. Do you have a rule of thumb for when it's time to hire a professional rather than going it alone? Question 1. And then do you have a rule of thumb for, and you may have just given it to us, but when to know that you need someone a little bit more nuanced or more special than that and need to go the tax attorney route? Because those are three completely separate things.
Yeah. So what I tell people, Malcolm, is if you, like I just said, especially if you make over 500,000, that seems to be a really good time. And that's usually who I work with individually, because we can do more advanced tax saving strategies. We can implement it for the client and make sure that everything is implemented correctly. And then we can start preparing their tax returns, because usually when you get to that mark, you've got some more opportunities for advanced tax saving strategies, and maybe even a bit more of a complicated situation. Or if you have a very specific situation. So like we have some clients that own a lot of property and they do like multi-family investing. So we've got those kind of clients. So that gets pretty complicated. Or maybe they work outside the country sometimes, or they have foreign investments. That's gotten very complicated. But for the most part, like the 500,000 mark is a really good benchmark for when you really want to reach out to me and work with a tax attorney one-on-one. But anything below that as a business owner, and I really encourage people to, even with their businesses, file your own tax return. Use freedom tax plans so you can reduce the taxes, but then file your own tax return, because most CPAs and accounting firms, they're basically using the same tax software that we can get, that the public can get now, TurboTax. They're very sophisticated programs.
I'm actually surprised to hear you say that. Frankly, I think that's a place where I was not expecting to hear you go. And again, in my day job, I find myself repeating to clients quite often that they make too much money and or they have too much going on to still be using TurboTax. And I don't mean that as a put down by any means. Like you said, it's very sophisticated software from where it started 25 or so years ago. I just think there comes a point where if you're lucky, where your tax situation is beyond the standard prompts and clicking a few radio buttons to find out whether you'll owe a few extra dollars this year or not, and kind of following along the numbers at the top of the screen when they turn red or when they turn back green and trying to play that game. That's usually where I tell people, like, if you are at a place where it's necessary for you to hire a financial planner, especially, you're definitely at a place where your tax situation is too complicated for you to be doing it yourself. So I'm surprised that that's actually the recommendation that you would make, given what you do.
Well, I've just encountered so many people who their CPA or accountant just does no tax planning for them. But I do agree with you, Malcolm, and I do agree with that. So if you don't feel capable of preparing your tax return, then that's also a time to reach out to a professional. Depending upon your situation, and if you do have a financial advisor. I get a lot of referrals from financial advisors, so I agree with that. But for a lot of people, if their situation is pretty simple, like maybe they get a W-2 from a job and then they have like a side gig, like a small business that they're starting. Again, use freedom tax plans to get those taxes as low as possible. And to increase those expenses without actually spending more money. And then it's easy, you're just reporting your net income for your business. And freedom tax plans will tell you how you need to structure your business as well. And that's really all you need to know for small businesses, especially when you get started in anything, when you're making, under 500,000, because that's the way you're going to reduce your taxes, is by reducing your income and making sure that you have your entity structured correctly, which is, again, all in the Freedom Tax Plan program. And I talk about it on my webinars. I really go into more detail.
Hey there, listeners. It's Eric with an A, and I'm interrupting the show for just a moment to tell you about our newest offering, the Tech Money Guide to Restricted Stock Units. This guide was developed to teach those who are paid in RSUs to develop a plan for how and when to convert those shares into actual dollars, as well as how to incorporate them into your overall personal financial plan. You may have already heard episode 50 where Malcolm described the guide in detail, as well as his own philosophy and rules of thumb when it comes to managing this valuable form of equity compensation. If you haven't, no problem. We would still encourage you to head on over to tech-money.com and download a free copy of the guide today. There's also a link to it in the show notes of this episode. Again, that web address is tech-money.com, and you can download a free copy of the guide right there from the homepage. In keeping with the promise of this show, our hope is that the Tech Money Guide to Restricted Stock Units helps make you just a little smarter about your money. Now back to the show.
So that's actually a good place, I think, to turn the conversation a little bit, because I teed up this episode as the difference between tax prep and tax planning, right? And tax prep is pretty self-explanatory, right? You're filing someone's taxes on their behalf, or they're filing their taxes on their own behalf using a tool like a Turbo or something like that we just talked about. But the definition of tax planning is not so straightforward, right? I've kind of leaned into it a little bit to give some idea of what it is and does. And so have you, with the idea of, finding opportunities to reduce your tax liability within the legal limits and making sure that you're checking each box that you're eligible for. And I guess the gist is really just helping people make decisions before the year is out that will ultimately help reduce that bill when they go to file, rather than the typical, how I see it, right? I don't mean this again as a put down to any of my friends who are accountants, but the looking in the rearview mirror analogy that I always use, right? It's always, I go to meet with my accountant in April and they say, oops, you could have done X, Y, and Z, but since you didn't, this is how much it's going to cost. And everything is, coulda, woulda, shoulda, right?
Yes.
Versus what I consider planning to be, we're looking through the windshield and we're saying over the next 3 years, 4 years, 5 years, these are the things that we assume you're going to do. And so as a way to make sure that you're not falling into that tax trap when you get there, these are the things that we're going to do proactively to reduce that bill before you ever even get there, which is a totally different approach, in my opinion, to working with someone on their tax situation. Anything else you'd add to that, sort of loose definition?
No, that was beautiful, Malcolm.
Okay.
I'm going to use some of what you just said. That was incredible.
I've made this case.
I have nothing to add.
Yeah. Well, I mean, that's actually one of the reasons I wanted to have you on, right? I saw from your website that your firm puts just as much emphasis on tax planning as you guys do preparation. And I just don't see many accounting firms making it as a clear distinction, right?
Right.
Same way, right? What are some of the activities? You gave us a little bit of it as far as using your home, your primary residence as the business deduction. But then what are some types of activities that you would consider tax planning that are sort of table stakes from an accountant's perspective?
Yeah, and what do you mean by that?
Yeah, well, so as an example, I'll bring it back to this group again. We just did an episode on the donor advised fund as an example, right? And so we'll have clients on a regular basis because they work for companies where they get paid really variable income. Folks in tech usually have a lot of variation to their pay. And so in the year that you're going to have a blockbuster income year, maybe the company IPOs, or the opposite, the company goes private, or somewhere in between. Maybe you just have a ton of shares that vest all at once. So you got to year 9 and now you've got to exercise all those incentive stock options at once, whereas you didn't spread it over a few years, what have you. So we know that this particular year, say 2022, is going to be a big income year for you. So as table stakes, we're always talking to clients about a donor advised fund and contributing those shares into the donor advised fund after they've appreciated, rather than contributing cash, or rather than making a donation to your favorite charity with cash.
Right.
Let's be efficient here and use the donor advised fund as an example, right?
Yes.
Anything like that from a tax planning perspective when you're dealing with entrepreneurs, that's just table stakes for you. Like every single client, this is what we got to do.
Yes. So, yeah, totally depends on the situation. But yeah, we use donor advised funds, something very similar to that, depending on the situation. And again, making sure that they are deducting as much as possible without actually, spending more money. And it makes such a big difference. So making sure your entity is taxed correctly. There's a way you can write off in certain circumstances, you can write off vacations. If you have children, there's a way to hire them. There's the best and proper way to deduct your medical expenses. And so those things really, really add up. So we always do kind of like what I call the low-hanging fruit, which reduces their taxes. Because especially if you're paying 40, 50% in taxes, every dollar that you can reduce your income by makes a big difference, 40 to 50% that you're saving. And then we start with the simple strategies first. And again, when we work with people one-on-one, we do all this for them and implement the strategies for them. If they do it through Freedom Tax Plans, they can very easily use that program, which again, will do it for them and produce anything that they need to implement those strategies very easily. And then when we work with people one-on-one, we do more advanced tax saving strategies.
What do you think the average person gets wrong with respect to their tax situation? Like, what should we all be more aware of or pay more attention to from your perspective?
Yeah, great question. So I really cover this in my webinars is how is the entity taxed?
Mm-hmm.
That is so important. And there's a couple different options depending upon your situation.
So let me go a little bit different way then from your perspective. I want to get the accountant's perspective here because I'm constantly coming at it from this side, and I want to make sure that I'm being fair-handed. But from your perspective, is there such thing as like too much information or too many expectations? I guess maybe is the way to say it. I'm thinking about the fact that like sometimes a client might say they didn't inform you about an event that happened in their life because they didn't want to bother you, right? Or they didn't think it was that important, or maybe they just didn't know you went that deep, right? And, like I'm thinking about it as you're talking about entity formation, right? So maybe I've got an idea for a spinoff from my main job, right? So I mentioned that I'm a Chick-fil-A franchisee, so I'll stick with that analogy for a second. And maybe I came up with some kind of system that helps make Chick-fil-A employees more efficient somehow, right? And so rather than have that flow through my main holding company that owns the various franchises, I decide to spin that off and turn it into an online coaching program or something, right? And I don't really inform my accountant about it because I don't think it's that important. But what I'm getting from you is that the legal entity that I use to structure that spinoff is probably just as important as most anything else. So how proactive should I be as a client when communicating with my accountant is what I was trying to land on.
Okay. Yeah. So yeah, you definitely want to be proactive. With us, when we bring on a new client, we ask very specific questions. It's very different than what most accounting firms do, is that I ask them, when I talk to them, if they want to work with us one-on-one or work with me one-on-one, I ask them very specific questions about their situation. And then they fill out a couple of surveys if they decide to move forward with us, as well as sending their past tax returns, which that really helps me put together the tax plan for them. So I know what I'm asking. So we ask and they're not difficult questions at all. I mean, you could easily answer them based upon your situation. And so we ask all those. We ask a lot more questions. Let me put it that way. We ask a lot more questions than the typical accountant or CPA does because of the tax planning perspective of it. And then if they use Freedom Tax Plans, again, there's certain questions that they answer that will help them and show them the strategies that they can implement and produce everything that they need for the implementation. So we really encourage people to share with us, and we're constantly sending emails to our clients and asking them, certain questions. So yeah, it's always better to share more than not enough. And with my clients that I work with one-on-one, what I do is, because I really don't want them to be afraid or don't want to take the time or don't want to pay the money to ask me a question or to meet with me, we just charge a flat fee. We don't charge an hourly fee like a lot of accountants do. And that comes with unlimited communication throughout the year. And my clients get a special link that they can book a meeting with any member of my team, including myself. And I can talk to them one-on-one. We can always answer emails and answer any questions that they have. So we really communicate a lot with our clients, and we really encourage them to share as much as possible, even their future dreams or goals. We definitely want to hear about that so that we can structure it from the beginning, the best way to save money in taxes.
So what I'm thinking about here is you and I are talking and we're going back and forth about this, and we're sort of playing from the same sheet music to an extent, right? And I'm thinking about, like, anybody listening to this and hearing us talk might be thinking like, yeah, that sounds good, but how would I know if I'm looking for an accountant, and how would I know if they offer more than just tax prep, right? Any advice on how to find an accountant who actually incorporates tax planning into their service offering and goes beyond the status quo?
Yeah, good luck. They really don't. Most.
Well, I'm thinking like the AICPA, also offers a what's it called? A personal financial planning designation, right? That allows accountants to take a decent amount of continuing ed, right? To learn more about their client's personal balance sheet and provide some guidance before it's time to actually press submit and e-file the return and all that, right? That's one I've found to be sort of helpful for those who don't want to go all in and commit to studying for like the CFP exam, for example. But somebody with like PFP or CPA or EA in their email signature on LinkedIn could be a good person to talk to. But I'm just thinking, like, if I'm the consumer and I'm trying to figure out how to narrow this down, like, I just don't know where I go to find the real difference, the key difference maker that tells me whether I'm going to get tax planning or if I'm going to get once a year the email that says upload your documents and we'll try our best to have it done before the 15th.
Yeah, and that's what most CPAs and accounting firms in America do. They're not tax attorneys, so they don't want to take on the, like, because there's a specific kind of liability that you're taking on without being an attorney. Because a lot of CPAs are warned, never to practice law. And sometimes, setting up an entity can be considered practicing law. And people have been sued over that or had their hands slapped. So there's like a gray area there between accounting and legal services. So being an attorney, I'm covered with that. I can easily obviously offer legal services, including setting up entities, including tax planning. So yeah, you really need to look for a tax attorney.
So hurry up and get to a place where I'm making $500,000 or more so that I can afford a tax attorney, so I can avoid all the headaches that come along with being in that gray area.
If you're not comfortable preparing your own tax return, then get any accountant, get any CPA that knows how to prepare a tax return, because all you're doing through the Freedom Tax Plan program is realizing and learning how to correctly set up your entity. So then you can easily, show your CPA or accountant the documents that are produced from Freedom Tax Plans, how you want your entity set up. And then the rest of the program is just how to increase your expenses without actually spending more money to reduce your income. So that's it. So you can actually, if you don't make the $500,000 yet and you don't feel comfortable filing your tax return, you can get a CPA or an accounting firm or an EA to file your tax return, but then use Freedom Tax Plans to just increase your expenses and know how to set up your entity correctly.
So my last question actually has probably absolutely nothing to do with taxes. So you can, take off your Freedom Tax hat and your Lael tax hat for a second and kind of relax your shoulders a little bit. But let's say for a moment you never found your passion for accounting, right?
Right.
So you had to find a different way to occupy your days, but money wasn't a factor in your decision making at all. What do you think you'd be doing right now?
Oh, that's easy. I'd be trying to be a professional tennis player or a professional golfer.
Okay.
If anybody wants to, we can write it off maybe as a business expense. I can come if you've got a great golf course. I will travel anywhere. Actually live on a golf course. Yeah. And really got into it a few years ago and really enjoy playing golf. And tennis, I just got into a year and a half ago, but really have enjoyed that as well. Luckily, we live in a place in the winter and the summer that has both of those activities. Awesome. So I can talk tennis or golf with anyone.
Well, on that note, Eric with an A, why don't you go ahead and close us out, sir?
I would be happy to. Christina, this has been fantastic. I love it when Malcolm brings on amazing guests, and I've been perusing the website while you've been talking, and it's really well set up. It's beautiful. So I love it.
Oh,
dig
thank
into
you.
it. Yeah, you bet. But thank you so much for being on the show. Of course, Malcolm, you're the master. You got this. You bring on these guests that are just fantastic and will help the listening audience in so many different ways. Thank you so much for facilitating this. And our last thank you goes to you, listening audience. Thank you so much for tuning in and listening to the Tech Money Podcast with Malcolm Ethridge. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Malcolm comes out with a new podcast, it'll show up directly on your listening device. We humbly ask that you share this podcast and leave a review, as this will help other people find the show. You can connect with Malcolm on social at Malcolm on Money. We'd love to hear from you and answer any questions you have, and you can do so by emailing them to podcast@tech-money.com. Again, thank you so much for listening today. For everyone at Tech Money, our hope is that this show helped make you a little smarter about your money.
This has been the Tech Money Podcast. For more information on today's topic, to review the show notes, or to catch up on past episodes, be sure to check out malcolmethridge.com/podcast. And if you have an idea for a show topic that you'd like us to cover, or you want to send us feedback, the web address again is malcolmethridge.com. You can also find Malcolm across all social media platforms at Malcolm on Money. This episode was written and created by Malcolm Ethridge, with the production, the editing and sound controls powered by Proudmouth. This has been a Malcolm on Money original. Thank you for listening. The information shared in this recording and by its guests represents the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.